All right. Good morning and welcome back inside my screen. Today, I want to share my analysis again on two pairs that I've been trading. I opened the position last week, but before we get into that, if you're watching this video, just do one or two things: is just click on the subscribe button so that you'll be able to be seeing my analysis. And each time I post a content, the algorithm will very much show you my content. That's how the algorithm works. Once you click the subscribe button and always like my content, you make it easier for the algorithm to show you whenever I post a content. It's as easy as that, because if you don't do that, if you only watch and go whenever I post my content, you won't be able to see that, because this channel is very much a new channel where I come to analyze the markets using both the fundamental and technicals, and also mapping my key levels on what I'm going to be trading or what I tend to trade, or my overview of my previous analysis. So whichever one is going to be among the three. Just like today, I want to show my analysis on gold, my positions on gold. And because I have two, I'm using two brokerage. I have XNS and IC market. I place on each of them, different lot size anyway. And today is I have an open position on gold, which is bullish, and likewise USDJPY, which is bearish. These pairs are negatively correlated, just like I've been saying about correlation on this channel. If you want to learn about correlation, you can watch my previous videos that I've done before, or you can go to my TikTok. The Trading Edge Africa on TikTok is where I break down my analysis. I break down the theoretical perspective of trading, what you need to know about trading, the most important thing you need to know about leverage and everything. And also, to put them in conclusion, I have a course that I've created for any interested person that is interested to learning how to swing trades, how to hold positions for as long as a week, depending on how long you see that position going. So this is how I trade. I'm more into swing trading. I don't day trade, I don't scalp, because it's too demanding and draining, and again, it's not profitable over the long time. You have to think at the long run, and that's where swing trading comes in, because it gives you that leverage to understand where the market is going, using forecast, using analysis from big banks like JP Morgan Chase, UBS. There's this software where I go and I get this analysis from banks and analysts from these big analysts that analyze the market. And each time I check the analysis from banks and I put it together with my technicals, it's always come in confluence with that. That tends to be the reason why if I take 10 trades in a month, I am right at least 7-8 times, because my analysis is always in confluence with the analysis from these bank analysts like JP Morgan Chase, Citibank, their Goldman Sachs, UBS. Like, there is a channel, there is a software where I go to see their breakdown on every tradable asset, be it Bitcoin, gold, currency pairs. I see the analysis and their forecast. Let's say they are forecasting gold to reach 4,000 per ounce by June 2026, which is next year. And when I see this, I know that if I should enter now, my overall target should be long term, which means, and as I enter that trade, I keep on following the analysis. I'm in track with the analysis, because most times, which is not always all the time though, they tend to reduce the analysis whenever the market, because trading is a dynamic something. You're in a dynamic environment where nothing is set on stone. So being able to know when to deduce from your analysis and when to add is key. So this is why I follow them. And before I even check the analysis, I have done my technicals. Like I said, technicals are used as a gatekeeping process, while my fundamental is where I get, okay, this is where if I buy now or if I sell here, this is my overall target. It could be a year, a month from now. Then I enter here and I forecast this. So this is how I trade. And again, do well to like, do well to subscribe. Just click the subscribe button so that whenever I post, whenever I make analysis, you are going to be seeing it, because that's the whole essence of the algorithm. Algorithms want to show you what you're interested in. So if you're interested in a particular person's content, or you are subscribed to, whenever the person creates or uploads a content, you will see it on your notification. That's why the algorithm makes it easier for you to see those you're following. It's in every platform, be it Facebook, TikTok, and YouTube. All you can do, again, click on the like button, click on the subscribe button, and after watching the video, do well to drop your comments. And if you want to get the course I created on how to swing trades, how to trade with ease and finesse, how to trade and do some other things, is suitable for those doing 9 to 5, suitable for students. And if you want to learn how I trade, I created a course I call the Trading Edge program. All you can do, comment interested under this video, and I'll see you on the next one. Now I would like to usher everyone of us to my screen. Let's go. Alright, so welcome here inside my screen. As you can see, this is good. Last week I conducted this analysis and I said, since gold has shown a double top here, the next level is coming to be at least closer to this trend line. As you can see, this is on a daily time frame. I'm more into swing trading, so this, my pattern of trading is not day trading, neither is it scalping. It's you seeing the long term, holding the trends for as long as a week. I do week, 2 weeks, depending on how long I see the explosion happening. And when I saw this, I knew this was the neckline. However, I don't like trading against the trend. I like to wait for the market to flag. Once I see the market have flagged, this is where I want to start buying or selling. And that being said, I already know that this trend line from the daily time frame is going to be respected. Again, my analysis I conduct on the higher time frames, like the monthly time frame, the weekly, and the daily. Then I scale down to the 4-hour time frame where I pick my entries. Now when I saw this, I brought out my fib level from swing low to swing high. Then I knew that if I want to enter, it will be above this 0.50 level. However, I still know that the market will slip back to this 0.60. This is what market always does. When you use your Fibonacci and the market is making pullbacks, the pullbacks will sometimes pass the 0.50 level and come down to the 0.60 level. Once the market gets there, it will take out the early buyers first, shake off some traders, then you see the market start making the move to where you want it to be. That's why it's very important not to use Fibonacci on any timeline that is more than the daily time frame. The daily time frame is, if you want your levels to be respected, you have to plot them on the daily time frames, on the higher time frames. Don't plot them on the 4-hour charts, and else you're into scalping. But if you want a trade you can hold for as long as a week and some days, this approach is very much for you. Again, if you want to learn how to do this, I have compiled it in a course. It's as simple as that. Now after doing this, I ruled this line. This was where the 0.50 level were resting, and I scaled down to the 4-hour chart. As you can see, this is IC markets. I scaled down to the 4-hour charts, and then I ruled this line. I shared this analysis on my channel or my Telegram, and I shared it with people. I told them that once this trend line is broken, besides, this is an inverse head and shoulder. As you can see, this is a head, this is a left shoulder, and this is a right shoulder. And this was that 0.50 fib level. And I said, once the market breaks above this trend line, this is where you want to be buying. However, you don't start buying, you wait the market to make an explosion, then do some pullbacks on the 4-hour chart before it starts buying or selling. This is how I trade. Now, once I saw this, I didn't start buying immediately. I waited for the market to pull back. I started buying. This was where I bought inside this level after this pullback, and now $40.32 in profit. However, my overall target is this, and again, come Monday, I want to see a pullback again where I want to open on that position with 0.10 lot size. And remember, this is good, and the overall target is this 3,500 per ounce price. How did I get this target? Because I've already known how to interpret the fundamentals, following my fundamental analysis from some of the softwares where I get them from. I brought them in confluence with my technicals, and my technicals already told me from this time frame that gold has made an inverse head and shoulder, and the neckline has been taken out. I saw an explosion, and I saw a pullback, a retracement, and I bought. And my overall target is this. And look at the lot size. And now I want to, from Monday, after a pullback, I want to add a higher lot size, which is 0.10, still with the next target, with the overall target, which is this. And once the market gets here, I'll close at least some percentage of my position, which is here. I'll be closing out some percentage here. Why? Because of this might actually be a turning point in the market. Once the market gets here now, and first is I want to see this, this 4-hour candle close on Monday. Today is Saturday, and after this close, and I see a kind of market pointing to the upside, I will add another position. Overall target is this, and once the market gets here, I'll close out some, I'll move this stop loss to break even, to at least protect my downside, protect my position, whereby this position, it will be a hedge to the new position I'm going to be opening. So this is how you trade. And for now, I still have just 2 positions open on my portfolio, which is gold and USDJPY. And this is a brief overview on gold. And now I will have to go to USDJPY here. USDJPY, the same thing. When you understand how correlation works, you are going to know how to use it profitably. Now, because likewise on a daily time frame, you don't trade the breakouts. I don't like breakouts. I like to trade once I see a breakout, I wait for pullbacks. Pullbacks always happen. It may not happen immediately, especially if you are into swing trading. If you are trading the long term, you are looking into the long term. Once you see a market breakout or make a bounce, pullback must happen. Just like as you can see here, pullback, continue. So once the market broke out, I waited for this green candle to come and retest this breakout, and then I started shorting this pair. When I went to as you can see from the 4-hour time frame, when I got there, all you can see here, this is it. When I saw this breakout from the 4-hour chart, I said, okay, the best thing is for me to wait. I didn't start shorting this pair immediately it broke out. I knew that any breakout always have a pullback, and the pullback is what will move the market further, at least give it some massive peep to either the upside or the downside. And this is it. When I saw this, I waited for this rally. And again, if you bring out your fib from here, swing low to swing high, from swing high to swing low, sorry, this is the 0.5 fib level. Although I don't use fib, although I always use my Fibonacci on the 4-hour time frame, but again, once I see a breakout or a bounce, I wait for the market to do what? To make some pullbacks. And on this position, the position is very much open and still going to run to look. The overall target is this. And this is where I intend to add another position here. I want to see a 4-hour candle close below here. This is going to be a quick scalp from here to here. I open this position with this position is running at 0.15 lots, and once I see a 4-hour candle close below here, I'm going to open 0.20 or 0.25 lot to the downside. Remember, I still have an open position on gold. So this is how you will hedge your portfolio. You will hedge your, especially if you're trading with, you want to manage your account, you want to grow, you don't over leverage, and you know how to use your risk management. You add to your position at a very specific price. You don't just add because you see your position going in profit. You add when you know that the profit you are on is going to safeguard your downside. Let's say you open a position on 0.10 lots and you are in, let's say, 100 pip profit. You're running 150 pips profit. If you want to add, you have to add 0.15, so that in case the one of 0.15 starts, maybe you added when the market was making some pullbacks or retracements, the one that is open will still very much protect your capital, protect your account, thereby making the broker not to liquidate your position. So this is how to use your risk management and how to use some call it hedging, but this is how to trade profitably, thereby protecting your account, because the most important thing in every business is you being able to protect your capital. And once you do that, over the time you start scaling. This is how you grow your account to a meaningful portfolio, and then you decide to go big. And going big could be getting a profit account or looking for investors, pitching your ideas and showing them your track record. So this is it on this analysis. As you can see, this is a very brief overview today. I just want to make it as brief as possible. And again, how I plot these levels I don't change them. They are going to be here until the market plays out, then I will reanalyze. I trade based on a particular level. I don't just change my levels or anything. So this is it for gold and USDJPY. Do well to subscribe, do well to like and comment. Again, if you want to get access to the Trading Edge program, or you can do comment interested under this video, I'm going to give you access to the course to learn how to do these things. And it's very easy. If you understand how to trade, profitable, how to trade, especially getting your edge. That's the most important thing. Once you find your edge in trading, the next thing will be talking about, capital, risk money. But the most important thing is your strategy. You can't just open your MT5 or your trading view and start trading immediately. No, you have to have a strategy. So that's it for this video. I hope you get something. And again, do well to subscribe. My TikTok account is the Trading Edge Africa. This is where I share my discuss about forex and some little conception and misconception, truths, realities, and everything you need to know about forex. So that's it for this video. Do well to subscribe and like. I'll see you on the next one. Cheers. Alright, thank you for sticking through the end of this brief analysis. I'll call it an overview because I've already analyzed these pairs on my previous video. You can go watch that to see how I started analyzing them. And again, if you're interested in getting the Trading Edge program, which shows how I trade, how I map out my key levels, how I interpret the market from the higher time frame to the lower time frame, is very, very much easier. Being able to know the overall flow of the market, where is the market coming from and where it's going, this is what gives you the edge. Because for you to know where something is going, you have to know where it's starting from. Again, if you're interested, you can click interested under this video. I am going to give you access to the course and also usher you into my private group where I analyze the market. I don't do signals because I'm not into scalping and day trading. I'm more into swing trading, where I share my analysis. And again, as you can see, gold is very much bullish, and again, I still have interest to add to the position. As you can see, the first position is just a test to that position. However, I have my overall target, which means from next week I want to see a flag. Once I see a flag on this pair, I add to the position to the upside. Likewise, USDJPY. Although USDJPY will be trading down to the previous support that was, that the market bounced off of. When it gets there, I'm looking for one or two things, either to start buying, or when it gets there and breaks below the support, I want to see a bounce and a retest. This is where I'm going to be adding to my short position. So this is how I trade. First, I start with one position, unlike what every other retail trader do. Once they are starting, they open 5 positions at once. No, I do it sequentially because this is how you want to use your leverage. Leverage gives you the ability to open up position even when your capital is too very small, and you want to use it wisely so that it's going to be in your favor. If you don't know how to use leverage, it's going to be against you. So once I open a position, let's say I open with 0.01, the next position I'm opening with 0.05, next I'm opening with 0.10. This is how I scale to 20, to 1 lot, 2 lots. And even if let's say I'm opening a position with 1 lot, I don't add immediately. I still open with 1.5 till I get to 2. So this is how I trade. And if you want to learn how to trade, you can do comment interested, and also do well to like and subscribe, because next week, like I said, we'll be doing it weekly, where I come here to analyze the market, share my screen and my analysis. I will see you on the next one. You know what to do. Be part of this movement, and also always share the video so that others can see. Invite your friends to this new channel as we grow in numbers. When good things come, when gifts come, everybody will partake in it. So I'll see you next week, and do well to subscribe, do well to like, and drop your comments. Cheers.